Hello and welcome back to Dukascopy TV. I'm Monica Gibson, and for one of our regular programmes I'm joined in the studio by Bruno Estier. Bruno, thank you very much for coming in.
Good morning, Monica.
Nice to see you again. Now we're looking at things from the technical side of things. So what's important about the US equity markets? What can you tell us?
I think what is important is to notice that since the beginning of the year, we have on two large indices that are represented here. On the top part, the Russell 2000, on the lower part, the mid-cap 400, together with their relative strength on the dotted line here versus the S&P 500 and here in orange, that both indices are making new highs versus the January high, and their relative strengths are rising. That means that the breadth of the market is wide and all stocks are moving up, and this is a bullish sign.
Okay, so does that confirm your target for the S&P 500 then?
That confirmed the target for longer term targets and different type of targets. Here we have weekly charts, and what we have as usual is the VIX index on the top and the weekly bars here since the beginning of 2013. And here we notice a second thing, which are the Bollinger Bands, which are flat and narrowing. Okay, the distance between the two bands is narrow here. And also we do have at 1740 about this 40 weeks moving average. And down there we have the momentum, and the momentum is turning up. Therefore, when we looked at the range, the beginning of the lows in the 1620 area in August, and the nice move up to 1850, we can there, using that, project something which gives us a 1988 levels for the medium term.
Okay, and what about the shorter term targets?
Of course, before that, there are a few short-term targets that can be similarly computed from different highs and lows that we have here. For example, we have one pointing to 1975, which is not far from the 1988 we have seen. We have one constructed from the 1737 level low in February, and that gives us 1920. The important things to notice is that the Bollinger Bands are moving up, and therefore we are moving out of a trending range into a trending mode, and that's reinforce the importance that the upside targets should be looked at carefully, because they are going to be reached relatively soon.
Okay, and Bruno, what about, where do we find support?
Well, in technical analysis, the technicians looked at the previous low, and the previous low is pretty far away without intermediate lows. It's at 1737 in February. And that level should be important because, as we just mentioned, the 200-day moving average is also in that area. That's the one here. As long as we stay above 1730, 1740, we have no problem with bullish scenarios.
Okay. And can we apply similar tools for the shorter term?
Fortunately, yes. We can apply that also to 2-hourly charts. For example, here, when we use the 1824 low here on the mid-February and the 1867 high, then we have a projection to 1893, which is probably going the next major stop in the short term. And again, here we had at 1834 on Monday, or during the so-called political crisis in Ukraine, a buy signal short term, and then we see that we are moving up also with widening Bollinger Bands. So this is relatively bullish.
Okay, now across the board, I understand you're bullish on the US dollar, but cautious on gold. Can you tell us why?
Well, usually gold is rising during period of uncertainty, and of course, last week, as we had also some of the political crisis, gold was even making new highs. We see that it moved above 1340 toward 50. Now, there is something which should attract our attention on this weekly chart, which is basically the fact that the clouds is above the prices. And that means that longer term, as we see also with this descending longer term trend line, the trend has been down. Therefore, there is a chance, given the fact that oscillators are relatively on a high over both sides, that this area will cap the market in the coming weeks.
Okay, so if there is a pullback, how deep could it be?
And of course, we need to go in on the daily chart where we have a ready answer, a very nice one, which is the same tool if we use the daily cloud instead of the weekly cloud. Okay. And this daily cloud is around 1850, and so we can expect basically between the two clouds, the weekly and the daily, to have a trading range between 1350 and 1250 for the coming weeks.
Perfect. Okay, something to look out for. Bruno, thank you so much for coming in and discussing it with us. Thank you. Well, that's all from Bruno and myself. Once again, make sure you click back to Dukascopy TV for the hourly updates and exclusive interviews. Goodbye for now.